Well, IIFL in a recent note indicated that power demand is strong on the back of a recovery in economic activity and growing demand bodes well for players across the value chain. Let's discuss this with Harshvardhan Dole, who's, of course, the veteran analyst with IIFL, who tracks the space closely. And, of course, Harsh looks at oil as well, so we'll pose some questions from that sector as well. But let's start with power. Harsh, what's the view? One clear view which has emerged is that, well, power demand is strong, so thermal sort of capacities, etc., need to be built up. But it's like a 4-5 year finite story. And then after 2030, terminal value goes to zero. Is that the way you look at things? And is there any way to sort of take advantage if you believe that to be true? Go on.
Hi, Prashant. Thanks. So in my opinion, the structure of power sector has changed materially over the last 10 to 15 years. Those who have survived are thinking about thermal plus green energy as essentially a way to scale up their respective businesses. So consider NTPC. While NTPC is adding, almost 20,000 megawatt of thermal power plant, it has plans to add 60,000 megawatt of green energy. And that's a material number considering their existing portfolio of assets. So when you talk about 2030, when perhaps a large tail of the thermal power plants will be fully commissioned, they will be ready with an arsenal which is as big as any other player in the country to grow the respective green energy business. And to that extent, when we do the DCF for the players who are actually surviving, per se, the DCF, when we do, the terminal value does exist for a lot of these players. There will be smaller and marginal players whose survival will be an issue. And perhaps DCS, doing a DCS exercise beyond next 4 years may not be fruitful. But for the large players like NTPC, Power Grid, NHPC, Tata Power, CESC, Torrent, I think there is a growth even beyond 2030, simply because they have distribution assets and of course they have ambitions which are other than thermal.
Hi, Harshvardhan. Good morning. Nigel on this side. Yesterday we had the management of Inox Green actually who joined us. But that has obviously implications for the group on the whole. And they are sounding very, very confident, in terms of the commentary, in terms of the capacity and the business they're doing. And they also said that EBITDA will grow at a faster pace than what we're going to see in terms of capacity as well as top-line growth. What's your view on them? Because these renewable-related stocks, they've already run a goodish bit. Suzlon, Inox Wind. Your view on them?
See, I wouldn't want to comment on the valuations because the valuations will be a function of too many things, liquidity, essentially the hope, etc. But after meeting both Suzlon as well as Inox, what we realized is essentially the industry structure is bottoming out. There is a long runway ahead of all these players. And if they are able to clean up their respective balance sheets, perhaps maybe the first round of cleanup is over, maybe a couple of more is pending. If they are able to do that, and follow up with massive execution, I think these stocks can materially re-rate from here on. I mean, if you were to do a simple back-of-the-envelope calculation, in peak days, wind industry did about anywhere between 7 and 8 gigawatt. After what the financial restructuring these both players have done, the respective break-even levels are well below 1,000 megawatts. And even if they are able to get 25 to 30% market share, assuming that industry does about 8,000 megawatt, there's a huge operating leverage. But as I said, the execution challenges need not be undermined. There are execution challenges. Perhaps second leg of balance sheet restructuring or cleanup is likely to pan out in next 12 to 18 months, subsequent to which I see the sector far more saner and growing what we have seen in sync with solar.
Right. Harsh, hi, good morning. This is Sonia here. Just one quick question on what your expectations are from the CERC regulations that are upcoming. What changes do you see coming and what would this mean for any of the listed stocks?
See, CERC is expected to come out with draft regulations, perhaps towards October end or November end. And that should lay a foundation stone of what the tariff structure is likely to be beyond FY24 for the subsequent 5 years. However, when we talk to the industry, do some channel checks, I think the regulatory system is likely to take far more pragmatic view and be slightly more lenient towards the existing structure rather than taking any adverse, rather tweaking the regulations adversely, which might have repercussions across the chain. As of now, the demand is strong and looks like there are only a handful of players who are equipped, to meet this incremental demand. So why disturb the Apple cart?
No, but in terms of stocks, okay, let's try and sort of put all of this together. Tell us what are your top picks, and quickly, what is the trigger behind it?
So I think after the massive run-up in the stocks, I should reckon that these stocks are not trading at distressed valuations. I would say that relative to FY24, the valuations are fair. Let's see how the regulatory framework evolves. And once that is clear, I would be more constructive on NTPC, Power Grid, Torrent Power, and maybe players like CESC. But we are positive on the entire value chain and would like to play the whole story through the utilities.
All right. What about the smart meters? They had a big run. And even yesterday, we saw Genius Power winning a big order of more than 3,000 crores. What's your view on the stocks? I don't know whether you'll have official coverage. But clearly, smart meters is going to be a theme, not just for this year, but for the next few years, going by the central government's vision.
Absolutely. In fact, when we had put out that note on smart metering, what we had put forth is this is a great beginning, and it should be supplemented by what they call as prepaid meters. And the smart meter theme is fairly strong. You have seen that from the order book that most of these players are getting. And if the execution is good, I think money can be made by the meter manufacturers as well as somebody who's managing the meters. And of course, the consumers will get 24/7 power at reliable tariff. So it's win-win for all. And in my opinion, what now holds the key is all the distribution companies coming together, realizing the benefits of smart metering and basically giving large bulk orders as what we have seen in past few months. So we are quite upbeat on that segment as well.
25 crore meters, right? I mean, that's the big number, which I think was put out. But that's over the next few years. Harsh, but have you looked at what stocks are pricing in, Genius, etc. recently, or no? Because they've run up quite a bit.
Unfortunately, we don't have a formal coverage on the game.
Correct. I mean, absolutely. But I hope you take a look at it and tell our viewers, because there's been so much interest around it. By the way, I think utilities have started sending out notice. I got an email from Best, which is the electricity provider in where I live, saying that we're going to be starting to transition into smart meters. So I think they're rolling it out as we speak over the next couple of months. Harsh, from the power space, let's talk about the oil and gas space. Will people make money buying, upstream companies here because of the sharp rise in oil? Oil prices are up some 30% since the middle of the year. That is one. And your view on oil marketing as well. Go on.
So I think looks like the valuations across the chain on the PSU front are ridiculously cheap. ONGC, after the outperformance, is still trading at 4 to 5 PE multiple. And this is a company that we are talking about almost 40,000 crores in terms of profits. So profits and cash flows is surely not an issue. I think what remains an overhang for the stocks across the chain is the fear that the government might actually come and take most of these gains from players across the value chain. And that includes upstream, midstream, as well as downstream. And that is reflected in their valuations. Let's look at OMCs. IOCL, which is one of the largest refiners and marketing companies in India, is trading at 0.7 time to a book. And at a time when first quarter has been great and second quarter is likely to be equally strong. So I think there is no answer to the fear that the investors have in their mind. Perhaps one has to wait out till the time this terminal phase in terms of volatility in the oil or some of these elections are over.
Harsh, we'll let you go on that note. Thank you for explaining the entire power sector to us.